Now let's learn what is this bank reconciliation, why are we doing this bank reconciliation, what's the purpose of this bank reconciliation through this video. Why are we doing a bank reconciliation is the main purpose or the main reason is if you look at the bank statement balance and if you look at the balance which is there in your accounts, in your bank account, end of the period there will be certain differences. So we are preparing this reconciliation in order for us to understand what are the reasons that led to this difference between bank statement which is sent by the bank and the bank account that our accountants prepare. So let me explain this one to you in a better way, in a concise way, using an example. So here see, I have given you a bank account or cash account. So what you have to understand, who is preparing this bank account or cash account? This is prepared by the company. Company accountants, they will prepare the bank account or cash account. Okay. But according to the account that the company prepared, what is the balance? What is the balance of the cash account or bank account end of the month or end of the year? Let's assume this is end of the month. How much is that? $5,400. According to the company, the bank balance is how much? $5,400. So this is something which is sent by the bank. Bank statement is something which is sent by the bank. So this statement bank is sending to our company end of the month. But when they are sending this bank statement end of the month, how much is the balance is there? Only 950 balance is there. So there is a big problem, right? What is the problem is, according to my accounts, there is a balance of 5,400. According to the bank statement, the balance is only 950. So why there is a difference? Bank is sending me a statement, right? End of each and every month, bank will send me a statement, a bank statement. So according to the bank statement, my balance is 950. According to the my accounts, the balance is 5,400. So what's the reason? What are the reasons that led to this difference? So that's what we are going to learn today. So there are several reasons, the differences between the bank balance of the bank account, which is prepared by the company, this is the company, and the bank balance of the bank statement. Who is preparing the bank statement? Bank is preparing the bank statement. So what are the reasons? I have given you several reasons. So let's go through each and everything while doing the question. So first of all, what you have to understand, you have to take your accounts and you have to take your bank statement and you have to check whether all the records are recorded properly or not. Let's start with the opening balance. My bank accounts opening balance, according to my accounts opening balance is 500. According to bank statement opening balance is 500. So that is perfectly matching. And there is a cash deposit that you have made in the bank account. So how much you have deposited? $1,000. If you look at the bank account, bank statement, there is a deposit of $1,000. But what you have to understand is, in bank statement, which is sent by the bank, they have included the 1,000 in the credit. So why they have included it in credit? You have to understand this one. You have to understand this one properly. Why they have included it as a credit amount? Now, if I deposit money in the bank, my asset is increasing, right? So if the asset increases, this is an asset account, asset increases, what is that? It should be a debit record, right? So here cash deposit 1,000 is debit. Okay. But the problem is in the bank statement, which is sent by the bank, they have included it in the credit side. Why bank is including it in the credit side? Now you have to think from the bank's perspective. So this is you have given your money to bank, $1,000. So if you think from the bank's perspective, this $1,000 that they have received, bank received, is bank's money? Is that $1,000 is bank's money? No. It is your money. So if you ask that money someday, bank should return it back to you. So it is a liability to the bank. It's a liability to the bank. So why it is a credit record? The liability is increasing, right? The liability is increasing. You are giving $1,000 to bank. Bank here, see, keep this $1,000. When I need the money, you should give it back. So for the bank, it is a liability, right? So that $1,000 I am giving to him just to keep. If I ask someday, the bank should return it back to me. So that $1,000, the bank that they are keeping with them, it's a liability to them. They should give it back to me someday when I request the money. So my liability, the bank's liability increases. So the bank's liability increases, we learn, it should be a credit record. So the bank statement is fully prepared from the bank's perspective. Okay. So I had a balance of 500. I deposited another 1,000. So balance has gone up to how much? 1,500. Already they had my cash 500. Now I gave another 1,000. So in total now they should give me how much? 1,500 they should give me because my 1,500 cash is there with them. So their total liability is how much? 1,500. Now let's see the next one. Cash deposit another 2,000. So let's see that 2,000 is there or not. Yes, it is there. Yes, it is there. So what you have to understand, whatever the things which is there in your debit side of the bank or cash account, it should be there in the credit side of the bank statement, because whatever the money that I am giving to the bank, I am keeping that money in the bank. So it is an asset for me, company, but it's a liability to the bank. Why is that? They are keeping my money. If I ask someday, as the company, if I ask someday that money, they have to return it back. So the 2,000 also is there. Then the total liability will increase to how much? 3,500. Bank's liability. So bank should give me that 3,500. Okay. and there is a check deposit A157. How much is that? 3,000. So A157 check deposit, how much is that? 3,000. So all four transactions are correctly recorded. Now let's see next one. C118 2,500. C118 2,500. If I go through the bank statement, it is not there. So that is a problem, right? That is a problem. This 2,500 is not there in your bank statement. It is not there in your bank statement. So what is this 2,500? You have to understand the things properly. If you know the accounts properly, you should be able to tell what is the 2,500 is. I got a check. I deposited the check in the bank, but in the bank statement, it is still not there. I deposited the check in the bank, so I debited for my accounts. So it is a correct way of recording. I recorded it properly. I got a check as the company. I deposited in the bank. So that 2,500 debit record is correct, right? So let's assume this check I got from one of the customer. So what will happen if that customer is a receivable customer? The receivable balance will get decreased, so it is a credit record. And my bank account is increasing, so it is a debit record. Bank asset is increasing, it is a debit record. So I deposit in the bank, it is done. So my records are done. I recorded it correctly. But the problem is, it is not there in the bank statement. It is not there in the bank statement. So if you take this C118 check, I deposited it, but it is not there in the bank statement. So what can be the reason for this? Normally, what you have to understand, in order to authenticate the checks, it will take some day. Now this customer has given me a check from the bank C. Okay, this customer has given me a check from the bank C. My bank can be bank D. This is my bank. This is my bank. My bank is bank D. Customer has given me the check from bank C. So bank C check bank D is receiving. Okay, I have deposited in my account. So bank D, what they have to do, they have to send the check for the central bank. They have to check whether the cash is there in the account, the customer's account or not. So by doing all these checkings only, bank can release the amount. Sometimes in the customer account, in the C's account, the balance will not be there. The 2,500 will not be there sometimes. So just because of I deposited the money, bank can't deposit that money to my account. Why is that? They have to check with the central bank. They have to check with the customer C's bank whether the cash is there or not. So they have to request from them. So they have to send the money to my bank. So there is a huge process involved, right? For this process, there is a time. It will take some time. It will take 2-3 days. You just think and see, if I deposited this check on 31st January, if the statement is 31st January statement, so probably this cash will be realized maybe 2nd February or 3rd February. After few days only it will be realized. After realizing only it will be there in the bank statement. So this 2,500, because of the timing, there is a difference. So this is a timing difference, we will call it as. This one is a timing difference. So these kind of checks we will call it as checks were deposited but not realized. Checks were deposited but not realized. So this is a timing difference. This is a timing difference. This is a timing difference. I deposited the check but it is not realized. We will call it as unrealized checks. We will call it as unrealized checks. The checks which is deposited but not yet realized. It is not there in the bank statement. So it is not bank's mistake. It is not our mistake also. We have recorded it properly. If we made a check deposit for the bank account, it is a debit record. We have recorded it properly. For the bank, for them to record in the bank statement, they need some time. So we have to give the time to them, right? We can't blame them. Why didn't you record the amount? So we should give some time. So it is not a bank's mistake also. So it is a process. For that process, there is a time. Because of this time, there can be a difference. So this is one reason which will lead to difference between bank account and the bank statement. Now let's see the remaining ones. So my all the debits records are done. So now let's go to the credit side. I have paid my salary through a check. So I want to change these check numbers. I'll change this to D195. This one I'll change it to D196. This one D197. This one D198. Okay, I change the check numbers. So salary D195,800. D195,800. So it is there in the credit side in my accounts. In the bank statement account, it is there in the debit side. Why is that? I have issued a check, right? So the bank is giving that payment to that particular customer on behalf of me. So the liability is decreasing. Bank's liability is decreasing. How much is that? It is $800. So it is there in the bank statement. It is there in the bank statement. So 6,500 was the balance. Out of that, 800 was given as salary. So the balance is how much? 5,700. D196. D196 is not there. So it is missing. D196 is missing. Insurance D197. It is there. D197 insurance is there. For John, I have made a payment D198. So D198 also not there. So if you look at the credit side of my bank account, D196 is missing. D198 is missing. That means for the electricity, I have given a check D196. How much is that? 600 check. For John, I have given a check D198 check. The check number is this D198. Okay. How much check I have given? 1,500 check. But the problem is, even though I have given the checks to these people, they have not gone to the bank and they have not withdrawn the money. So I have given the check, so I have recorded it properly. If I give the check to them, I have to record it properly. So I have recorded it as credit 600, I have recorded it as credit 1500, so I have recorded it properly because I have given a check now. If I have given a check means I have made a payment. Payment means it will reduce my bank balance. So it's a credit record. If it reduces my bank balance, it should be a credit record. So that is recorded properly in my accounts, but it is not there in the bank statement. Why it is not there in the bank statement? These people have not gone to the bank to take the money yet. They have not gone to the bank to take the money yet. So we will call this one as well the checks issued but not present to the bank yet. Checks issued but not presented to the bank for the payment. So this is also a timing difference. This is also a timing difference. We will call this one as unpresented check. We will call this one as unpresented check. So whatever the checks that we have issued, but the people, relevant people, if they have not gone to the bank, if they have not presented the check to the bank to take the money, we will call it as unpresented check. And there will be certain checks which we have deposited in our bank account but not yet realized. We will call it as unrealized check. So if you take this particular question, I got a check of C118,2500, I deposited in my bank account, but still it is not there in the bank statement. Why is that? Because to do that process, it will take some time. Okay. If you take the 600 and 1500, which is D196 and D198, I have issued the checks, I have made the payments, so it is there in my credit side, but even though I have made the payments, those customers have not gone to the bank to take the money. If they have not gone to the bank to take the money, how it can be there in your bank statement? Bank will not know, right? If the customers goes to the bank, only bank will know I have issued a check like this. Okay. So it is not there in the bank statement. So according to the things that we learn as of now, there are two things which is there in my bank account which is not there in the bank statement. What are the two things? One is unrealized checks. One is unrealized checks which is there in my bank account. I will write it here. Available in bank account. Okay. Not available in bank statement. Not available in bank statement. What are the two things? One is unrealized check 2500. Other one is unpresented check. Unpresented checks. So this is C118 2500 check. Okay. Here you have D C118 2500 check, D196 600 check. This is one check. Okay. And there is another check D198 1500 check. There are two checks which is not unpresented. So if you take this unrealized check, it is there in the bank account but not there in the bank statement. If you take this unpresented checks, two checks which is given to the customer, they have not presented it to the bank. They have not gone to the bank. So if they have not gone to the bank, it will not be there in the bank statement, obviously. So unpresented check, two checks are there. One check is D196, one check is D198. So this one also there in the bank account, but it is not there in the bank statement. Now we did the cross checking between the bank account and the bank statement. Now let's do other way around. Now let's cross check the bank statement with the bank account. Now let's cross check bank statement with the bank account. So here again from 5,700, if you made a payment of 700, 5,000 is the balance. There is something called bank charge. It is not there in our bank account. There is something called bank loan and interest. So bank loan, if I have taken loan, for the loan they will cut the money from my bank account. So it is there in the debit side. So it is a liability reduction. They will reduce my money. Okay. So these two are not recorded in the bank account. So these are mistakes. These are omissions. Not recorded in the bank account. Not recorded in the bank account. And direct deposit. What is this direct deposit? Is one of my customer, what he has done is he has directly deposited the money to the bank account. He has not informed me. He didn't inform me. He had my bank account. He directly deposited the money to my bank account. He didn't inform me. So if he didn't inform me, how I will know whether he deposited or not? I will not know, right? He took my bank account details and he deposited the money, the customer. So if he deposited the money, how I will know? He should inform me, right? So that 300 he deposited, it is there in the bank statement, but it is not there in my accounts. So these things I have to adjust for my account, right? These things I have to adjust for my account. I have not included these transactions in my account yet. So I have to include it. And interest income. Sometimes what will happen, whatever the investment that I have made, from those investments, I will get interest, right? If I have purchased some bonds for the company, I have directly given my bank account details. Okay, you credit the interest for this bank account. So how I will get to know these people have credited, these people have given the interest once I get the bank statement only. So in the bank statement, it is there, in my bank account, it's not there. So all these things I should record. And if you take the standing order, I have given a standing order to make the rent payment, but I am telling to the bank here, see, I am giving an order for you. Every month you deduct $1,000 from my bank account and pay my rent. So bank is doing the transaction on behalf of me. I will get to know the bank has done the transaction or not once I get the bank statement only. So this is also there in the bank statement, which is not there in the bank account. Dishonored check. There is a dishonored check. What is this dishonored check? Is the customer who gave me a 157 check, it has been rejected by the bank. This check, if you take $3,000 check, what you have to understand, this $3,000 check which is given by my customer. So if that customer give me the money, what will happen? The receivable balance will get reduced and my bank asset will increase. So I have increased the bank asset. I have deposited it here. Here, see. You have to understand. A157, I have deposited it, right? I have deposited it. But the problem is A157 has been here. If I deposit, my balance will increase from 3,000. It has increased to 6,500. So whatever the increase will be there in the credit side. Okay. So I'll write it here. Whatever the increase will be there in the credit side, whatever the decrease will be there in the debit side. Okay. So it has, I have increased it by 3,000 because I got the money. I got a check. So bank has deposited it. After that, they have asked this particular bank whether the cash is there or not. Cash is not there. So if not, sometimes the signature is wrong. If not, some error is there in the check. Therefore, the check got returned. Dishonored check. There is another name that we can use. Return check. Return check got returned. That customer gave me a check. It got returned. Dishonored. So what will happen? Whatever the amount that they included for my accounts, they have to remove it back. So they have removed it. They have added. Here see, from 3,500 they have increased to 6,500. After that they say, okay, the check is dishonored. Therefore, they reduce that amount, 3,950. It got reduced to 950. So increase by 3,000, decrease by 3,000, set off nothing, zero impact. So here there is a dishonored check that is not there in my bank account. I have taken it as a deposit, right? But it is wrong, right? Actually, I have not received the money from the customer, right? He gave me a check, but it got dishonored. Therefore, I have to take it to other side and I have to cancel it off. Okay. So whatever the things that I have highlighted, in the bank statement, it is not there in my bank account. So what you have to understand, my bank account is wrong. This 5,400 balance is a wrong balance. This is a wrong balance. Because this 50 is not there, this 500 is not there, this 300 is not there, this 200 is not there, this 1,000 is not there, this 3,000 is not there. All these things are not there in the bank account. That means how I can say this 5,400 is correct? It is a wrong one. It is a wrong one. Therefore, I have to correct my bank account. So if I look at the things that I have given here, see, the reasons that will lead to differences between bank account and bank statement, bank charges, loan interest, direct deposit or direct remittance we will call. Direct deposit, if customers directly come and deposit the money. Investment income, sometimes I will get dividend income, bond interest, bank interest, everything they will deposit for the bank, but I will not know until I get the statement. Standing orders, dishonored checks, errors made in accounting. When you are doing the account, sometimes you can make errors, right? Sometimes you can make errors. Let's assume instead of writing this 1,000, if you have written 100 as your cash deposit, instead of writing 1,000 for this cash deposit, 1,000 is the correct cash deposit. Instead of that 1,000 cash deposit, if you have written 100 cash deposit as $100, so that is an error, right? So that error will lead to a difference between bank account and the bank statement, right? So if you have made some error in the accounting, those things will lead to a difference between bank statement and the bank account. So what you have to understand here, these two I have given, okay, according to this example, which is there in my bank account, but not there in the bank statement. And remaining things I have given, all these things, okay, it is there in my bank statement, available in bank statement, but not available in bank account. If it is not available in the bank account, that means what is the reason? That means this closing balance is wrong. So I have to correct it. Now I am going to rectify the problem. I am going to rectify the mistake. Therefore, I have to prepare an account called adjusted, or we'll call it as corrected bank account. Who is preparing this? Company. I am preparing this because in the bank statement they have charged these things. They have included these transactions which is not there in my accounts, right? So I have to include it. So this 5,400 is wrong. So I am taking this 5,400 wrong balance, which is my wrong balance. Okay, wrong balance. Let's make the adjustments here. This 50 is a reduction. Bank charges is a reduction. Here, see, I have given reductions and additions. Bank charges is a reduction. So I'll write it. Bank charges 50. So that is done. How it is done? Bank loan interest. So it is a reduction. Bank loan and interest reduction 500. Direct deposit is an addition. They have deposited the money, but the deposit is not there in my accounts, right? So that 300 is not there in my account. So let's record it. Direct deposit. How much is that? 300. Interest income, it is an income will increase my balances, asset balances, so it increases. How much is that? 200 interest income. And standing order rent payment, bank has made that payment from my account. Bank has made that reduction. I said you whatever the reductions will be recorded as debit, whatever the increments will be recorded as credit. From the bank perspective, why is that? For them, liability increases, it's a credit record. Liability decreases, it's a debit record. So they have made the payment on behalf of me, but that 1,000 reduction is not there in my bank account. So let's make that 1,000 reduction. Standing order, what is that? Rent. So this one is done, this one is done. Next one is dishonored check. Dishonored check, here see in my account I have included it as a debit, but it is wrong, right? So if I give the double entry for dishonored check, what's the correct entry? First of all, I'll write the correct entry, original entry. If you get a check from the customer, what you will do? You will debit your bank account by 3000 A157. Okay, you will credit your trade receivable. Okay, how much is that? 3000, because that customer gave me 3000. Okay, now you have to reverse this original transaction, right? Because the check that he gave me, it got bounced, it got returned, it got dishonored. So I have to reverse this transaction. So let's reverse it. Debit trade receivable 3000, credit bank account, how much is that? 3000. So I am going to reverse it. 3000. Here you can write dishonored check, or other entry would be, it is your trade receivable. So now let's find out what is your corrected bank balance. Okay, corrected bank balance. Now let's find it out. So if you take here, how much you are getting? 5400, 5700 plus 200, 5900. So what should be your corrected balance? Corrected balance. If not, it is your carrying down balance. Here it is brought down balance. Okay, corrected balance, how much is that? 5900 minus 50 minus 500 minus 1000 minus 3000. So corrected balance is how much? 1350. So I corrected my bank account by including all the adjustment which I didn't include my bank account. I corrected my bank account. So in my bank account there is a balance of how much? 1350. But still there is a problem, right? Even after correcting the bank account, my balance is 1350, but according to the bank statement, balance is 950. Even after I correct my bank account, my balance is 1350, but according to the bank statement, it is only 950, right? Big problem. So what is the reason? Now there are certain timing differences we learn, right? So I said you timing differences, it's not bank's mistake. Timing differences is not our mistake also. So now let's do a reconciliation and see, by removing the timing errors, by removing the timing changes, timing differences, by removing the timing differences from the accounts, let's see whether my balances are getting same or not. So I am going to start with the corrected or adjusted bank account balance. How much is the corrected bank account balance? 1350. It is 1350. Okay, $1,350. Now here see, if you take this 2500, it is a check which is not yet realized. You have deposited it, but it has not yet deposited for your account. From the bank's perspective, is that they need some time. So let's assume if that has not happened, what should be my bank balance? Let's see. So here I have added it. For my bank account. So let's remove it and see. Let's remove it for the temporarily. You remove it and see whether are we getting the same balance or not. So I write it unrealized check. How much is that? 2500. Okay. Here I have deducted 600. Here I have deducted 1500. So in total I have deducted how much? 2100. These 2100 checks are I have given to the people, relevant people. They have not taken the money from the bank. Why is that? They will take the money when they want, right? So let's see. Now here I have deducted it. If that reduction has not happened, so you have to add it. If that reduction has not happened, so how much is that? 2100. So 600 plus 1500, 2100. So this is, I'll write the check numbers. D196 unpresented checks, D196, and you have D198. Unrealized check, what is that? Unrealized check C118. Okay. So now let's see what's the balance that you are getting. This is my corrected bank balance. If now I am removing these timing differences. Okay. If this 2100 is not recorded, what will be the balance? If this 2500 not recorded, what will be the balance? You know, obviously because of this 2500 and because of this 2100 and 2500, there will be a difference, right? So if it is not recorded, what will be the balance? So let's see. 1350 plus 2100 minus 2500. So what's the balance that you are getting? You are getting a balance of 950. Now see the bank statement. Bank statement balance is how much? 950. So this is balance as per bank statement. Balance as per bank statement. So this is what we'll call it as bank reconciliation statement. Bank reconciliation statement. So you have to remember very important certain things. What are the things that you have to remember? First thing that you have to remember is always bank reconciliation statement will be done from your adjusted bank balance. For the adjusted bank balance, you have to adjust your timing differences. Then you see the balance that you are getting according to the bank statement balance or not. Sometimes what will happen, but you have to remember another one more adjustment that I want to tell you. Sometimes very rarely it will happen, very rarely. When the bank is preparing their statement, there will be errors. So if there are errors in the bank statement, you have to adjust it in your errors in bank statement. Errors in bank statement. It can be a plus, it can be a minus based on the error that the bank is making. So if there is any error in the bank statement, we have to include it in the bank reconciliation statement. So if it depends on the error that you are making, whether it is plus or minus, it depends on the error that you are making. So here what you have to understand, always bank reconciliation statement should start with the corrected bank balance, and you will do your timing differences adjustment, unpresented checks and unrealized checks, and you will have to find out what is the balance according to the bank statement. So it is telling, if it is telling, everything is okay. If there is any errors in the bank statement, you have to adjust that one also. And next one is, always you have to keep in your mind, in your bank reconciliation statement, unpresented checks should be added, unrealized checks should be deducted. Unpresented checks means what? I have given the checks to the people, they have not presented it to the bank. So whatever the reduction has not happened. So if that is the case, you have to reverse, you have to add it. Unrealized check means I have deposited it, but not yet realized to my account, not yet deposited my account. So it has already added to my account, so I have to reverse it and see what will be my balance, so I have to deduct it. So unpresented checks added, unrealized checks you have to deduct it. And apart from that, you have to keep in your mind, for your adjusted or corrected bank statement, you will never record the unrealized checks or unpresented checks, because those are not mistakes. Whatever the omissions, only you have to record in the adjusted or bank account, whatever the mistakes that you have done. Now here these are omissions, right? You have not included this 50, this 500, this 300, this 200, this 1000, this 3000 is not included. So if it is not included, you have to include it, and you have to correct this wrong bank balance. This is the wrong bank balance, so you have to correct that wrong bank balance by including all the changes. If you have made any errors in the bank account, you have to rectify those errors as well. So those are certain important things that you have to remember. So here I have given unpresented checks and unrealized checks, and bank statement errors. Bank statement errors are never recorded in the adjusted bank account. So in adjusted bank account, these things you shouldn't record. Just keep in your mind, they are recorded only in the bank reconciliation statement. All the cash book omission, cash or bank book omissions, and cash book or bank book errors are recorded in the adjusted bank account. So as I said you, whatever the omissions like this and whatever the errors that you have made in the bank account should be adjusted in the corrected bank account. The closing balances of the normal or cash bank account is always recorded as the opening bank balance as the adjusted bank account. So as I said you, now this is your normal bank account that you prepared. So this is a wrong balance. That wrong balance will be taken as the opening balance of the adjusted bank account. So that is another thing that you have to understand. So using this wrong balance, we are rectifying the mistakes, all the mistakes, to get the corrected bank balance. So this is your corrected bank balance 1350. Closing balances of adjusted bank account is recorded in statement of financial position under current assets or current liability. So what you have to understand, in your statements, if you take your statement of financial position, you have current assets, right? Under current assets you have bank, right? Under bank you have to write this 1350 corrected balance only, not these wrong balances. Don't write these wrong balances. You have to write this correct balance 1350 only. That one you have to write under current asset if it is a bank positive balance. If you have bank negative balance, that means if you have overdraft, you have to write it under current liability. Sometimes this can be a overdraft, right? This can be maybe 1000 negative. Okay, so here its opening balance will be there in the credit side. If it is in the credit side, what is that? It is a bank overdraft. If that is the case in the bank statement, it will be displayed like negative. So what you have to understand, if there is a bank overdraft, it should be there in the credit side. If it is a bank balance, positive balance, it should be there in the debit side. That means under current asset. If it is overdraft, it should be there in the current liability. So these are the certain important points that you have to remember. So from this video, by using one question, I gave you a comprehensive, concise, clear, very good explanation by including all the necessary adjustment which will be there when it comes to the bank reconciliation. So as I am always telling, what you have to do, until you get the things properly, logically, with the proper understanding, with the focus, watch the video and do the question. I am pretty sure if you do like that, you will be perfectly okay with this particular topic.